Greetings, folks. John Grace, President, Investors Advantage, and the Money Doctor is in. So welcome aboard, and please subscribe and like the information that we're sharing with you. Congratulations, you made it past April 15, 2015. I know it was harrowing, and apparently it took a lot more time and a lot more money than most of us understood. So we came across some interesting statistics that we thought we would share with you. And for example, for the majority of Americans to comply with the tax code, gather the records, find the rules, read the rules, fill out the forms, it took on average about 13 hours to do all of that work. 13 hours. Cumulatively, it looks like that took about $168 billion out of our pockets, and it took about 6 billion hours as a total for the country to prepare to file their returns. That's a whole lot of times. So if we look at the burden of 13 hours, and then we look at what people wanted to do with the refund, we go to Yahoo Finance just yesterday, and we find that the average refund was about $3,034. This is interesting because in the past, when people had refunds, they immediately went out and spent it. But things are changing. I think you get a sense of that because when we look at the statistics of over 5,000 folks in a poll, we find that the first thing that most people said that they would do was to save that money, like 46%. The second thing was to pay off debt, like 34%. And the third thing that was most popular was to spend it. That was only 20%. So as I say, things are changing and people aren't as apt to take all of their money and spend it. They want to do other things, and this is a very different environment that you've seen in the past. But let's do the math a little bit further. You know, we like math, we're not afraid of it, so we don't want you to be afraid of it. If you were getting a refund of about $3,000 and it took you on average 13 hours to do all the paperwork to get that refund of $3,000, and if you had to pay someone to do that work, that would mean about $233 an hour. Now, did you pay yourself $233? I mean, you know, when we have a rental house, we do all the work ourselves, right? But when we have to pay someone, we have to pay them in hard dollars. So isn't it interesting what we're willing to do for ourselves for free? And when we have to hire someone, we have to pay them to do the job. So let's complete this math project. Because if it was $233 an hour, and we did this, it took us 40 hours to do this, that would mean an income of about $9,300, okay? And if it's 4 weeks in a month, that would be $37,000 a month approximately, times 12 months. Boy, that adds up to a whopping $447,000 that we would have had to earn if we were to be paid $233 on an hourly basis. Well, if you were earning close to $500,000, I have to imagine that would put you in the top 1% that we've heard so much about as far as income is concerned in the US of A. And by the way, the average household income in the US of A is all of $50,000. That's a little bit down. We think it peaked about $52,000. So if we look at the average income of $50,000 and we look at the average tax bracket, the highest tax bracket for 2013, the federal level was 39.6%. But what people do is they get caught up in that, looking at the highest tax bracket. That's the last dollar that was paid, but you have marginal brackets that you have to go through. So we get stuck in the last dollar. We have to look at the average. And what we find is if we were single, the tax bracket, the effective tax bracket, might have been about 16.86%, let's say 17%. And if we were married, it was about 13%. 13%, 17%, that's not going to kill you as far as taxes are concerned. To keep things in perspective, it's the effective tax rate that makes the difference, not the highest tax bracket. If we go back to 1950, and that was when the baby booms were in full order in terms of coming out, right? From 1946 to 1964, their birth years for 76 million people. If your parents were making $50,000, by the way, in 1950, the highest tax bracket was 90%. And the effective tax bracket might have been 20% on a $50,000 annual income. But certainly 20% is more than 17% or 13% compared to 2013. We'll take 17 or 13% as opposed to 20%. Certainly relative to being as high as 90%. To put things in greater perspective, the average household income again is about $50,000 today. In 1950, the average household income was a whopping $3,200. The average house might have been about $8,500. Gas was 18 cents a gallon, and lo and behold, you could buy a whole car for about $1,500. So let's go back to why is it that you file your return? The answer is it's required, right? It's mandatory. It's not optional. So we're going to suggest to you that you make it a requirement of yourself to look at your financial future. The question is, what does it take for you to make work optional? Take the time to figure it out. It may take you 10 hours. It may take you 13 hours. You do this routinely for the tax man. Let's do it for ourselves, all right? So again, share this, subscribe. We will appreciate your comments, and we'll leave it at that. The Money Doctor is out.